Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today's Saturday, so let's mostly talk about the market updates. Recently, it's the Q4 financial report, another season of the 2023 financial report, and major US banks have deteriorated earnings in the fourth quarter due to the US banking crisis earlier this year. The Federal Savings Insurance Company charged JP Morgan Chase and other banks about $8.6 billion in special fees in the fourth quarter to cover the huge sum spent during the banking crisis last year, having a significant impact on the bank's profitability, the data showed. So let's first take a look at some example banks. First, JP Morgan Chase. It reported a net profit of $9.307 billion, down 29% sequentially and 15% year-on-year. On top of that, the federal agency charged JP Morgan Chase $2.9 billion in special fees. And BOA reported a net profit of $3.144 billion, down 59% month-on-month and 55% year-on-year. The bank said $2.1 billion. The bank paid $2.1 billion in special fee to the Federal Savings Insurance Company and offset $1.192 billion in bad debt. This has also been partially due to the fact that, remember, in the 2023 banking crisis, Bank of America and other large U.S. banks have together contributed to become responsible for the Silicon Valley Bank and Signature Bank and other regional banks. So now it's been their responsibility to deal with those regional banks' debts that has been less profitable compared to the other regular bank that BOA and these larger banks have already been holding. During the same period, Citigroup posted a net loss of $1.839 billion, compared with an income of $3.5 billion in the previous quarter and $2.5 in the fourth quarter of 2022. Citi pays about $1.7 billion in special fee to FSI. Wells Fargo posted a net profit of $3.446 billion, down 40% from the previous quarter and 9% from a year earlier. Wells Fargo paid the Federal Savings Insurance Company $1.9 in bad debt of $1.2 billion. In addition, the four banks fell in the fourth quarter. Citigroup CEO Jim Fraser said the group results were very disappointing. Citigroup announced it'll cut 10% of its workforce, or about 20,000 people. Jamie Dimon, chief executive, said higher fiscal deficit and spending and supply chain adjustment could lead to more sticky U.S. inflation and higher interest rates than market expectations. At the same time, markets should also focus on the risk of monetary tightening by major central banks, the Ukraine crisis, and conflicts in the Middle East. And then let's take a look at the Federal Reserve Board. So today, Federal Reserve has posted its preliminary financial information for its operations and income of 2023, and let's take a look. The Reserve Bank's 2023 sum of total expenses exceeded estimated earnings by $114.3 billion. In 2022, the net income was positive $58.8 billion. So according to this chart, we can see that the net loss for the Federal Reserve banks have been showing significantly in in this year specifically since the beginning of the rate hike and the inflation crisis. According to the Federal Budget Office, this situation will remain worse in the coming years as the Federal Reserve having to pay a higher interest rate debt and the higher cost of raising future interest treasury yields in the future. Therefore, the Federal Reserve have to be more conscious about what time and as soon as possible to be at the same time being safe and being able to adjust the cost of operations offering to the Federal Reserve, even though it has the potential and ability to make up this cost gap. The Federal Reserve paid $281.1 billion to the financial institutions last year, compared with $102.4 billion in 2023. Meanwhile, the central bank held $163 billion in bond interest last year, compared to $170 billion in 2022. Although this does not affect the operation, it increases the risk of deferring the defaulting the bonds and affecting the treasury and the government operations. When the Fed resumes earnings depend on when it starts to cut interest rates. Right now, it is widely expected to end its interest rate hike cycle and will start cutting rates in March. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.